Today's update is extremely important because the cryptocurrency market is moving through one of the most intense and transformational phases we have seen in a long time, and XRP is right at the center of it. There is a lot happening behind the scenes: announcements, institutional movements, regulatory developments, and macroeconomic factors, all combining to shape what could come next for XRP in the short term and beyond. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Over the past week alone, the XRP ecosystem has seen an incredible amount of activity. One of the biggest technical developments is that token escrow functionality, known as XLS85, has officially gone live on the XRP Ledger mainnet. This is a major infrastructure upgrade because improvements like these move XRP further away from speculation and closer toward real-world financial utility. The conversation across the industry is clearly shifting. Instead of asking whether blockchain will be used, institutions are now asking how fast adoption can scale. During the recent community discussions, several key Ripple leaders shared insights about where the market is heading. Ripple CEO Brad Garlinhouse, President Monica Long, and former CTO David Schwartz all highlighted a similar theme. The next phase of crypto growth will not come from hype cycles, but from genuine economic usage. David Schwartz explained that the decentralized finance market has remained around similar valuation levels for nearly 2 years, and much of its expansion came from price speculation rather than actual economic growth. Meanwhile, traditional lending markets operate in the multi-trillion-dollar range. According to him, the real opportunity lies in connecting blockchain technology with real-world assets, such as equities, bonds, and money market instruments, through tokenization. This idea connects directly with what Ripple leadership has been emphasizing for months. Monica Long recently reinforced that 2026 is expected to be a defining year, not sometime far in the future, but now, where institutional adoption begins operating at scale. The expectation is that utility-driven demand could eventually become a stronger price driver than speculative trading cycles we've seen in previous crypto bull markets. Many long-term XRP supporters believe this transition toward utility may fundamentally change how value enters the ecosystem. Institutional interest is also becoming more visible. Reports indicate that major financial institutions have gained exposure to XRP-related investment products. For example, large investment firms accumulated significant positions in XRP exchange-traded funds during late 2025. While the dollar amount may not appear massive compared to their total assets, the signal itself is meaningful. Institutional participation often starts small before scaling larger once regulatory clarity and infrastructure mature. The fact that XRP exposure is increasing relative to competing assets suggests growing confidence among traditional finance players. At the same time, Ripple's global regulatory positioning continues expanding. The company has secured multiple approvals across different jurisdictions, strengthening compliant payment corridors across Europe and Asia. Licensing progress in financial hubs like Singapore and partnerships across Japan, where Ripple maintains deep banking relationships, highlight how blockchain settlement systems are slowly integrating into existing financial frameworks. Japan alone has dozens of banking partnerships connected to Ripple technology, showing how adoption can grow region by region rather than all at once. There is also increasing discussion around stablecoins and liquidity infrastructure tied to the XRP ledger. The idea is that regulated digital dollars could act as bridges connecting traditional finance with blockchain settlement rails. If future regulatory approvals continue, this type of infrastructure could position XRP within global liquidity flows rather than only within crypto trading environments. That distinction is important because utility-based demand tends to be more stable than purely speculative demand. However, short-term risks still exist, and it's important to acknowledge them honestly. Broader macroeconomic conditions could influence crypto prices regardless of fundamentals. For example, concerns about potential government budget disruptions or geopolitical tensions, including ongoing uncertainty involving international relations and Middle East developments, may create temporary volatility across financial markets. Events like these historically affect risk assets, including cryptocurrencies, even when long-term fundamentals remain unchanged. Market sentiment indicators currently show elevated fear levels among investors. When fear dominates, prices can remain under pressure or experience sudden drops. But historically, periods of extreme fear have also coincided with accumulation phases where long-term participants quietly position themselves while retail interest declines. Legendary investor Warren Buffett famously advised being cautious when others are overly optimistic and paying attention when fear becomes widespread. Many blockchain supporters believe the current environment reflects one of those emotionally driven market phases. Another major technical milestone approaching soon involves permissioned domains expanding onto decentralized exchange functionality within the XRP ledger. This feature is designed to allow institutions to interact with blockchain infrastructure while meeting compliance requirements. For years, large financial entities have needed regulated environments before committing capital on-chain. Developments like this could help bridge that gap and enable institutional flows to operate directly within the ecosystem. On the macroeconomic side, recent inflation data came in slightly lower than expectations, which may give central banks more flexibility regarding future interest rate decisions. Lower rates historically improve liquidity conditions and can benefit risk assets, including crypto markets. Additionally, ongoing legislative discussions around digital asset clarity continue progressing, with bipartisan interest suggesting that clearer regulatory frameworks could emerge. Regulatory clarity has long been one of the biggest missing pieces for institutional adoption, so progress in this area remains closely watched. Despite occasional short-term price movements, whether small rallies or pullbacks, many long-term observers are focused on larger structural shifts rather than daily percentage changes. The gains many investors anticipate are not small fluctuations, but potential multi-cycle growth driven by adoption, partnerships, and regulatory integration. Current market conditions, where sentiment remains cautious and retail participation is relatively low, are often viewed by long-term participants as accumulation environments rather than peak excitement phases. Ultimately, these are perspectives based on ongoing developments, market observations, and publicly available information. The coming months will likely play a significant role in determining how quickly that transition unfolds, and many investors are watching closely to see whether 2026 truly becomes the year where institutional adoption begins operating at scale. Those are my thoughts and opinions based on current developments, and as always, staying informed and thinking long-term remains key in a rapidly evolving market. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.